Let's take a step back and look at the bigger picture first, because this is not just about one company. This is about an entire layer of the AI economy that most investors are still underestimating. When people talk about AI, they usually jump straight to software, models, or big names like Nvidia and Microsoft. But underneath all of that sits something even more critical: AI infrastructure. Should you buy AI infrastructure stocks like Nebius and Coreweave? That's the money question for today. AI infrastructure is the physical and operational backbone that allows artificial intelligence to exist at scale. We're talking about high-performance data centers, specialized cloud platforms, GPU clusters, networking, cooling, and energy optimization. Without this infrastructure, AI is just a theory, and that's where companies like Nebius and Coreweave come into play. Let's start with Nebius. Nebius is positioning itself as a next-generation AI-focused cloud and infrastructure provider, built specifically for machine learning, large language models, and compute-intensive workloads. Unlike traditional cloud platforms that were designed decades ago and then retrofitted for AI, Nebius is being built from the ground up with AI as the core use case. That matters because efficiency, scalability, and cost structure become a competitive moat when demand explodes. As we can see, Nebius is currently trading at almost $100 a share. If we look at the past year, we can see that Nebius has gone up 230%, which is, as you know, an insane amount for just a single year. The stock was even trading at almost $140 a share at some point, and that while the company isn't even making real profits. So what makes Nebius so special? Well, one thing in the shot already tells you: the revenue forward 2 years, as you can see right here. That is currently expected to be more than 430%. When we look at the revenue growth over the past 2 years, we can already see huge exponential upside. The revenue from March 2025 was sitting on $55 million. Just 2 quarters later, in September 2025, revenue grew to almost $150 million. This is almost a 3x within just 6 months. This trend for Nebius is expected to continue during the coming years. And that's why Nebius stock has been going up so much and investors are keeping an eye on this stock. When we look at the analyst recommendations, we can see that most of the analysts give Nebius a buy rating. The average price target for the stock is $151 a share, which is around 52% upside from its current price. And even banks like Morgan Stanley are announcing price targets for this stock. Personally, I do own Nebius stock and I'm not thinking of selling any of it because I think this is just the beginning. Now let's go over to Coreweave. Coreweave takes a slightly different but equally powerful approach compared to Nebius. Coreweave specializes in providing high-performance GPU infrastructure at scale, primarily targeting AI labs, enterprises, and model developers that need massive compute power right now, not years from now. Coreweave has effectively become a critical supplier in the AI arms race, renting out the picks and shovels to the companies building a next generation of AI models like Nvidia. When we look at Coreweave, we see that the stock is currently trading at $105 a share. It went up 176% in the last year. It was even trading at above $180 a share last summer. Unfortunately, we can't see the forward revenue on this chart, but we can check for ourselves, of course. When we take a look at the revenue and the gross profit of the last quarters, we can see that the company is consistently growing. The revenue was almost $600 million in September 2024. 1 year later, the revenue was almost $1.5 billion in September 2025. This is more than a 2x in just a single year. Just like Nebius, is Coreweave gaining a lot of momentum in the market they operate in. What's important to understand here is that AI infrastructure is not a niche market anymore. It's becoming core global infrastructure, similar to how cloud computing replaced on-premise servers over the last decade. The demand is not hype, it's structural. If we take a look at Coreweave's analyst predictions, we can see that most analysts are currently rating the stock as a buy or hold, with an average price target of $125 a share, which is still 14% higher than the current stock price. I believe that a year from now, most analysts will increase the price targets, and we might see an average price target of around $200 a share for the stock at the end of the year. So here's my prediction. Over the next 3 to 5 years, AI infrastructure will become one of the most valuable players in the entire technology stack. Companies like Nebius and Coreweave are positioned to benefit directly from that shift. If these companies continue scaling efficiently, improving margins, and locking in long-term demand, their earnings power could increase dramatically by the end of this decade. Applying what I would consider reasonable forward multiples for dominant infrastructure providers, the upside potential becomes very compelling. In a base case scenario, continued growth could easily justify returns that significantly outperform the broader market. In a bull case scenario, where AI adoption accelerates even faster than expected, these companies could become foundational players in global AI infrastructure, delivering exceptional long-term returns for early investors. And yes, you're still an early investor if you buy these stocks today. And honestly, I still think even these projections may end up being conservative if AI becomes as important as many expect. Thank you all for watching. If you want to see more videos like these, then hit the like and subscribe button. And I'll see you in the next one. Bye.